Hey guys, I wanted to give a quick update on price action we saw this morning. So I posted last night on Twitter that basically what's playing out right now is exactly what I wanted to see. We broke 4-hour market structure. I wanted to see us come down, tag back into it, and then test this 4-hour and also 12-hour breaker below for me to reload longs and look for a sweep of these equal highs. And then tag into some of this fair value gap. So playing out perfectly so far. It sort of is just a result of non-farm payrolls that came out. So if you look at the bottom of the breaker, it's right here. And then the top tick was 1 point higher. So it doesn't get much better than that. And you sort of just need to have orders in place before it happens. I mean, had you had something in place, it would have looked like this. Stop goes up here. Target 1 is actually the old lows. Target 2 is going to be top of this breaker. Excuse me. So pretty decent trade there. What am I looking for now? I'm all out of positions and I'm just waiting. So what I want to see is some sort of bullish price action develop in here. So I want to see the 1 hour switch bullish, possibly dig deeper into here, but I'm not going to just blindly buy this on the first test because we could easily just puke right through it and take out these lows. I think a lot of new traders especially get caught up in needing to bottom tick stuff, or at least wanting to bottom tick stuff. So we had talked about the fact that this fractal that I'm looking at, which is the bullish break in market structure, tagging lower and then sweeping these equal highs, happened back in June. So just to recap, you had this bullish breaker here. You had a market structure break on the daily here when we closed through it. So what you would have been looking for is for it to tag back down into it, develop bullish price action, and then push away. So if we roll it back to that time period, you can see you had plenty of time to get involved, right? Like, let me just pull up the continuous chart so you can see more volume. Maybe this one's gonna be easier. No, let's just get a new chart up. Okay, so daily back in June. Okay, so you had the bullish market structure break. You had the daily breaker candle here. And you just had so much time to get involved. It's not like you had to make a snap decision, and you shouldn't have just bought blindly the first time it tagged the order block, because you would have had to endure a pretty decent drawdown. So order block forms, we push under it, we come up above it, and we try and flip it. So we came up, put in some of these equal highs, and now we retested it. So if you had blindly bought the first test, you would have had to endure a 53 point drawdown. So not great. So what you would have wanted to wait it to do is for it to bullishly break market structure on the 1 hour, retest the 1 hour breaker, and then get you a little bit tighter of an entry. So what does that look like? It could have looked like a breaker here, a market structure break there, testing this area. You could have done it here, same scenario. I don't love that one. Maybe you'd say it's this candle. Yeah, there were plenty of times that you could have gotten involved. The point is, like, you don't have to buy the first test, and you usually shouldn't. Like, it's rare that it just completely turns around. So, for example, here, you basically had, let's call it 6 days to get involved, and that wasn't even when we actually took off, right? Like, when this happened, we finally turned around, and all we did was come in and fill in this fair value gap before coming down again and retesting this, right? So if you didn't take profit off here at the first test of the range high, you then had to watch your trade completely round trip before you got to try again. So maybe you held onto your position, right? Like if your stops are in the right place, you're fine. So in this scenario, let's see if we can just replay this. In this scenario, your stops go here. There's your breaker. They go under this candle. Either one of these. I would probably put it under the lower one, right? But that's still a pretty big range, 155 points. So that's why you want to drop down to something lower to see what you can get. So for these entries, like you certainly have a tighter R. So maybe you say you're going to enter here, stop goes below that guy. Target one is always the old highs, but because you're within a daily breaker, you're not necessarily targeting the hourly highs, right? You're going to be ultimately targeting the daily highs that happened before it tested back down. So you're not targeting here, you're targeting here. Excuse me, it's this guy. Let's get rid of this. It would be this hourly one. So you're not targeting the hourly highs, you're targeting the daily highs. The problem with that is you have to be smart and manage your risk, because if you're trading on the hourly, like sure, your target is higher, but again, like you would have had to endure round tripping your trade 3 times, 4 times, and possibly you would have definitely gotten stopped out here only on the hourly before it actually launched. So that's why you sort of want to manage risk, manage positions, and take profit when it's sensible. So you had a 2R here. What did that look like on the daily? On the daily, all we did was come down, sweep it, push away. We tagged into this fair value gap, dumped back down, swept these lows, then launched, okay? So you couldn't know that on the hourly. You couldn't know that it wasn't going to come up and sweep these highs. You couldn't know that it was just going to tag into the fair value gap and then sweep the lows. So how do you manage that position? Well, first of all, you put your stops in a place that makes sense, right? So below these lows, it shouldn't get tagged, or it's likely going to try and sweep lower. You are looking to take profit at the sweep of these highs first, and then you want to look for any sort of bearish market structure that develops that's telling you it's time to get out, right? So that's your target. It gets hit right here. There's no SFP. There's no bearish break in market structure on the hourly, right? So you entered on the hourly. You need to be framing everything on the hourly. So yeah, we came back. This to me at the time just looked like a bullish retest of that breaker. So far so good. There's no market structure break. You're continuing higher, still no market structure break. Then you get one right here, okay? And the very next candle, you bearishly test back into it. So if you hadn't completely exited your position here, you know, probably not. Maybe you're taking half off or something, and then you're waiting for it to sweep the daily highs. You certainly should have gotten out right here. And that would have been a 2.5R. And then what would you have been looking for, right? Well, you can either sit on your hands, or you say, okay, clearly we're not ready to go sweep these highs. Clearly we're not ready to dig farther into this. We've come to our objective, which is sweeping these highs. Now we're probably going back to the lows, right? So that entry, now that you've broken market structure, you've swept these highs, you've broken market structure, you've closed back below this range high, right? Okay, you've closed back below it. This is a classic like range play. So at this point, let's just put the range on there. You would say range high here, range low here. If you've swept the highs, closed back under it, you're now looking for shorts to the midpoint and then to the bottom of the range, okay? So you close your long position, you take a short here, Stop goes there. Target 1 is probably these recent lows, which is a little over close to a 1.5 hour. Target 2 I would probably say is these plus the mid-range. Beyond that, you are targeting back into this bullish breaker, possibly looking for a sweep of those lows. So I'm not sure if it actually swept these lows before pushing. The low there was 44.50, 44, yeah. So it just swept these lows and then launched again. So to me, that would have been your entry trigger again. So you take the short here, typical range play. Once you see this candle close right here, you get out. Why? Because you've swept these lows after sweeping the highs. Yeah, you leave some equal lows here, but maybe you just say, you know what, I'm gonna punt it. It's an easy long to punt, and my risk is 15 points. Fine, take that. Target 1, mid-range, and also the bottom of this low. Target 2, these highs, right? So you got both on that trade. Okay, so again, that's still tagging into this lower 1 hour order block that we originally got filled on. So what's your target now? If you get filled there, again, you're targeting these highs. Next up, you're targeting these highs. Again, that's still not the daily highs that our complete objective is. Oh, actually it is on that point. That's your actual objective. So the first time we didn't get there because we were chasing on the hourly. The second time we did, right? So first time we stopped here before coming back down. So we just swept the hourly highs. Second time, target was achieved, right? So target 1 is going to be these old highs. We get in there. We didn't fully actually sweep the daily on this one yet. So what happened after we swept these highs is we sort of like fake broke down. So that happened here. You had this SFP at the highs, looked like we were going to go lower, but we held this key range before pushing, okay? So maybe you get stopped out there, no big deal, you wait. We come into the bottom of this fair value gap up here. We tag into it perfectly. We have trouble. We can't close inside of it. Doesn't look like we're going to sweep it. And then if you're unsure, you should definitely be sure by the time this happens, right? Market structure break on the hourly. We tag back into it, into the breaker. We don't even get that high. We tag into it reasonably well, but what we really tag into is this push candle, right? And then we start auctioning lower, okay? This time we actually did come down. We swept all these lows, but we didn't actually sweep the daily breaker lows, okay? So let's just get rid of all of this. We'll add back in bullish market structure break on the daily. We had this daily breaker, and what this candle did right here is it came down, it swept all of these lows, left the rest intact. You never closed below the breaker, and then it pushed away. So on this one, how did you get involved for the final time? Well, you drop down to the 1 hour. You see that we've swept the lows. That's not enough to get involved, right? Because we could easily, now that we've closed under the breaker block, we could continue going lower. But instead, you wait, you watch for bullish price action to develop. So you could have said, that's your break. You could have said, that's your break. Either one, what you're doing is you are reloading longs on the test here. Excuse me, right here. Stop goes below the wick. And target one has got to be probably here. At this point though, like, you have tested this breaker. I would say this is one test. Two tests. Second test usually pushes harder. Not always, but in my experience, second test pushes harder. So once you sweep these lows, once you clearly reclaim that breaker, you break market structure, you tag back into the bullish order block zone. Now it's time to get long, right? Stop below the wick. You can target here if you want to just instantly take some profit at a 2R. But if you're going to zoom out and see sort of bigger picture objective, like at this point, we still hadn't taken these daily highs. We had tagged into the fair value gap, but we hadn't taken these highs. So that's got to be your objective. And dropping down to the hourly, that gives you a 6.5R. Like, that's huge. So just if you were looking, if you're just taking one contract on this, like, it's pretty remarkable, right? So you've got 29.5 points of risk times 50 equals 29.5. 50 is 1475. And you're doing that times 6.7. Okay? So your that could be your payout, okay? Just from a single contract traded. Obviously, if you scale up from there, if you're trading 10 contracts, that's 90K, like, pretty good day, right? So that's why I'm saying, like, when you are looking at the S&P now, let's get out of the replay. You have time. Like, you don't have to buy the first test. Like, if you go from when we originally broke market structure, the first test of the order block until we actually, like, pushed away for good is 15 days. You have 15 days to get involved here, right? Like, that's crazy. That's plenty of time. You don't have to rush this. There's no guarantee that this little breaker guy is actually going to hold up, right? Like, we could come a lot lower. We could come down and test this guy. Who knows? I don't know. Like, point is, you need to wait at this point. We've done what we thought it was going to do. Came up here, tagged into it, went to our objective. Now we wait, right? Same thing as back in June. You want to see some form of bullish price action put in on the hourly. So come up, come back down, break this market structure, tag into the breaker, launch. Okay? So maybe your breaker block ends up being, I don't know, some future candle down here. You tag into it, good to go. But you don't enter the trade until this happens. Okay? Now, on crypto front, sort of waiting for the same thing. Crypto's actually held up better. I think worst case, you're looking for this breaker block. So on crypto, I use the wicks, by the way. S&P, I use the bodies just because I found it's more accurate on S&P. It just rarely stops at the wicks. Crypto can stop at the wick in reverse. The other thing I'm watching for is actually this 6-hour zone on Bitcoin, okay? Crypto's held up better. So S&P is already down into this zone. Crypto is not. So let's just see how it develops. It could just be lagging. No way to tell just yet. But again, I want to see these lows have already been swept. I want to see bullish price action develop. If we're hanging around up here on Bitcoin after having swept these lows, while the S&P is putting in bullish price action down here in its breaker zone, I might just punt along, right? Because Bitcoin is following the S&P, so whatever S&P is doing, Bitcoin's going to do. So that's what I'm keeping an eye on here. again, like we've broken market structure bullishly, so I'm looking for higher. Bitcoin, what I want to see, same with S&P. I want to see it tag into the breaker, develop some bullish price action. I want to target here first, and then into this fair value gap next. I think it's a little soon to be targeting highs up here. I think it's soon to be targeting highs up here even. I mean, you're asking at that point for 16% rally or a 30% rally. Like, that just seems a little rich for me for now. Ethereum, same thing as Bitcoin. Ethereum's just been in this sort of like crap zone. So it's close to tagging this 12-hour zone. I actually don't know if it has a 6-hour. Yep, it's got a little guy right here, but that's close enough to the 12-hour that probably take that. But all of this is just chop. Like, we've just been chopping around doing nothing for a while. So until we get out of the chop, like, I'm not really looking for much. So we'll see what happens. We can quickly touch on the dollar, although I don't really have much more to say there. We've been over this a few times at this point. We have this monthly zone that we were paying attention to for a pullback, which we got, dropped down to the weekly. You had this SFP, but I was saying on one of the last streams, like, to me, this is a bearish SFP into key resistance. You expect that to get tagged lower on a first test, and all it looked like to me we were doing is just bullishly retesting this breaker zone the same way that we did back here before pushing higher, okay? We also did it back here before pushing higher, okay? So everyone was like, this is the top, there's all this bearish weekly divergence, blah, blah, blah. Just, to me, it's a bullish retest, okay? So as long as the dollar keeps pushing, risk assets are gonna go down. But what I'm looking for is for it to maybe squeeze a little higher, maybe take out these highs, dig farther into the monthly zone up here, and then maybe go lower, check out these equal lows, something like that. So I don't know if any of this is going to happen, but that is my plan for now. So not really doing too much as it relates to getting into trades. When you have big zones like this, so if you have a big daily idea that you're looking for, you want to be patient for sure. And you also want to size appropriately. So for me, on these swing trades that obviously last a little bit longer because it's a daily time frame, I'm gonna put on a lot more size than I normally would. And the reason for that is I'm going for bigger swings. So it's sort of counterintuitive, and a lot of people don't necessarily do it this way. But I might be willing to take like 5% risk instead of something like 1%, because daily time frames, weekly time frames, higher time frames are harder to manipulate. So to me, like, you should be risking more if you know what you're doing, because your reward is going to be higher. You have a better, cleaner setup usually. It's harder to manipulate it, so it's less likely that you're getting swung around and chopped out on something like a 5-minute time frame when those are easy to manipulate. Like, you don't necessarily have perfect entries there. You're never gonna have a perfect entry, but point being, like, on the daily, if you have a clean setup, it's likely to actually play out. If you have a clean setup on a 5-minute, it's easily manipulated. So for me, what I'm looking for, again, I want to see us dig down deeper into this 4-hour zone. I want to see us put in bullish price action in here. So at the very least, my risk to reward is a 1.3. That's just targeting the old highs, and that's just entering on this 4-hour breaker, like, at the top, which I'm not doing. Again, this is the 4-hour breaker within the daily breaker. Let's just make it purple or something. So what I'm looking for is 1-hour bullish price action to develop, and what that will allow me to do is to get my stop, instead of being 106 points away, maybe I get some bullish price action that happens like here, and my stop ends up being something like this, right? Like I'm looking for a tighter stop, better risk to reward. Target one is always the old highs. And then beyond that, what I'm looking for is for us to start digging higher into these daily fair value gaps, right? So I want to see these equal highs taken. I'm glad they got left there because I think it adds to the narrative of what I'm looking for. Beyond that, like I want to see this first bullish order block tested, bearish order block tested, and then I want to see if we can get into that fair value gap. That's 11% from now, 8 to 11%, but those would be my next targets. So let's start with some bullish price action, see what happens. If we don't get any and we start trading below this breaker zone and we flip it bearish, then you're going to want to look for shorts lower. My targets there then become the COVID zone, right? Pre-COVID crash, that's your next objective because we already tagged this guy here. All right, well, I hope that helps. Hopefully you guys have a good rest of the week. Don't get chopped up on the weekend in crypto, and I will see you on Monday.